All right, good morning, everybody. It's just a little bit after 6:30 in the morning on Wall Street. I keep looking that way because that's where my clock is. I can't see my watches. So, anyways, it's about 6:30 in the morning on Wall Street. So the all the traders are waking up and trying to or getting ready to get their first trades going. So everyone wants to get their macro on. This is your best opportunity to uncover fundamental investment opportunities. My name is Wayne. I am the founder. I'm also a Harvard trained economist. I love trading. I love trend trading. And therefore, you need to understand the global money flow developed by macroeconomics. So, anyways, if you're watching this on YouTube, you're watching it probably 4 or 5 hours late. So, why don't you swing by QuantBox.co and take a look at what we got? Do you want to automate all your macroeconomic analysis, comparing dozens and dozens of asset classes around the world? Yeah, cool. Try it out. $8 for a trial. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's quickly look at the dashboard. I don't even know if there's I haven't added it. No, I haven't added it. I need to figure out how to do that. But we have a quarterly outlook coming up. I decided to do it on Tuesday, July 18th at 10:30 a.m., where we figure out all of July, all of August, all of September, and be ready for the fourth quarter. So there's a lot to do. There's a lot of work for me to do, but I'll go through and I'll organize what's on QuantBox, but I'll also go directly into the Fed databases and develop stuff that's important to us, but might not be automated on QuantBox. So we can take a look at high frequency data as well as economic data and look at what would go into predicting likely market moves in this third quarter, which we just started. So if you can, well, I'll pop it in the chat, but I'll send out an email for the event and you can sign up. It's a whopping $10. Probably take me 10 hours to develop it. So a buck an hour ain't bad for a Harvard grad. So check that out. Oop, let's bring it back before we go to the charts. Let's take a look. Let's take a look at QuantBox. Log into QuantBox Pro. I got to put the right email, so I update my browser. There we go. And by the way, is the data not loading? This is because you're using the wrong browser profile. Switch to the Gmail account associated with your QuantBox. Yeah, because a lot of people send me emails. They're like, it don't work none. Log in with the right Gmail, bro. Okay, so anyways, there you go. Oh my God, look how beautiful this is. It's amazing. So anyways, this is the new dashboard on the Pro service. Just very, very quickly, Bitcoin is up 0.89%, so not quite 1%. And I finally got my Bitcoin. So, anyways, that's good for me, I think. Still have to get it cleared. Euro dollar basically flat. S&P 500 up 0.25%. Gold up 0.2%. Oil up 0.1%. And the 10-year T-note stuck at 4%. It was actually a little bit less than that earlier this morning. Kind of interesting, huh? Now we're right on that 4% yield. Yeah, that 4% psychological level is important. Also, remember it was like it was like 4.04 or 4.06. It was quite a bit higher. Now it's coming down. What that means is money is going into the bond market. So where's the money coming from, huh? Is it coming out of the stock market? Well, not today, but the stock market seems to be stuck at 44. So we'll take a look at the S&P 500 in our analysis this morning. And then, oh my goodness, you might notice this. You're like, what? There's a risk on, risk off gauge. What is that, Wayne? Yeah, cool, right? So this is looking at what's happening right now. So I actually launched this yesterday, right around the stock market open in the United States. So right as Wall Street was getting their first trades on, and it was neutral like this. Neutral, it says mixed, like it's not bullish, no bearish, right? And then by the time the market opened and got going, this turned bullish and the stock market went up and everything else. And what happens is it'll highlight um, about five different assets you might consider in a risk on mood, and three assets you might consider selling in a risk on mood to maybe try to do some comparative analysis and maybe euro yen long or something, right? Right now, it's neutral in the moment. Okay. Now, you might say, how does it make this decision? I'm like, woo, what an astute question. Let's see if I can address that. Yes, it looks at what the US dollar is doing versus everything. So we pull in data from the Dixie. Cool. We pull in data from yen futures contracts from the COT. Okay. We look at what gold is doing. We look at what the VIX is doing right now. Now, what is the VIX doing right now? So on and so forth to say, ooh la la, risk on or risk off. So right now it's neutral, okay, which is nice. So it's looking at stuff. Over here, when we look at the scatter plot, we're also trying to figure that out. So where did my drawing tool go? Oh, there it is. Okay, so for example, QuantBox is looking at VIX and it's looking at dollar index and it's looking at gold. It's looking at yen futures. We're trying to figure out what is the mean and slope of the mean inside of this scatter plot. Is it this way? Is it this way? Or is there no discernible pattern? And in this case, there's no real discernible pattern. I'd say it's just slightly this way, slightly, but there's right. So, anyways, same thing. Okay, same thing, different measurement. These are two different tools measuring kind of somewhat the same different, but not actually. I'll say no. Two different tools measuring two different data sets. Some of them not in the other data set and coming to the same conclusion. So this is why it's important to you as an analyst. The scatter plot showing you what's happening right now. The gauge is doing something else, looking at everything right now, and changes. It'll change throughout the day. Um, and we get to the same conclusion. Be cautious right now. Cool, right? Tell me, it is cool. Okay. And then here, these are different scales, if you will, to show you comparatively. Let me zoom in for you. Comparatively, for example, the green is how high the Japanese stock market was and still is relative to the other stock markets around the world. So you could look at this and say, if the stock markets around the world are coming down, the Japanese stock market, the JP 225, is way overbought. Okay. And then look at the FTSE here at the bottom, right? Up 2% for the year. The Japanese stock market's up 40% a year, still after the decline. The Japanese stock market was up 45% this year. Ain't no more. So, anyways, it's interesting to have that kind of visual comparative analysis because it's hard to go through all those charts, but on top of that, to be able to compare on scale, see how it gets scaled. So you can just very, very quickly say, oh God, look at the Japanese stock market. Ooh la la. Okay. So that's kind of a cool thing. But before we move on, you're probably looking at this and you're like, hey, this is interesting. Okay, so the market, because remember, this is looking at just risk on or risk off. This is talking about the entire market for all asset classes. It's what am I? I'm clicking on everything. It's there we go. It's mixed today, but what about longer term? I mean, today doesn't tell you. Is it mixed inside of a longer term bullish market, bearish market? You're like, Wayne, I wish I had more data than that. I'm like, oh, well, then I'm your genie in a bottle. Yeah, cool. That's your wish. So this morning, as of about 35, 45 minutes ago, we've launched the risk gauges, a new part of the Pro package that will give you daily, weekly, and monthly analysis, looking at yen futures, gold, S&P 500, the yield on the 10-year T-note, the dollar index, and the VIX, putting it all together. In the short term, it's mixed. In the long term, it's mixed. But on a weekly basis, when you look at all these things, ciao. Okay, risk off. Okay, so you're bullish Swissy, bullish yen, bullish dollar, bearish Aussie, bearish euro, so on and so forth for the medium term. And this was different yesterday. All of this is live yesterday, 12 hours ago. This was actually risk on, and this was mixed. It's changing in real time based on what's actually happening in the market. It's not doing comparative analysis of economic data. Remember, that's the economics. The other component that we've been talking about, when I go to a chart, I'm like, okay, comparative analysis between, let's say, Switzerland and Australia based on their economic data. Okay, that gets to a bias, but it's just economics. Then we say, well, but that's not the market. We still need to use our charts to figure out what traders and investors are doing. Maybe they're thinking 6 months ahead. Maybe they're being emotional. Maybe they're making irrational decisions. Maybe they're just, it's cyclical inside of the seasonality. We don't know all these things, but the market is different than the economics. Well, now you have market tools to tell you what the market's actually doing. So now you have economic analysis and market analysis coming together. Plus, QuantBox takes technical analysis into consideration as well in its economic comparison. If you remember the score charts, it's also looking at technical analysis. So now you're going from this kind of picture to like this kind of picture now. Hey, you're welcome. So check that out. Um, Okay, check that out. That's a new part of the pro package of QuantBox, which remind everybody is cheaper than the retail package. So you get like 10 times more and you save money. So anyways, check that out. So this is all live. This is all working for you. Cool. Looking at the scatter plot again, taking a closer view, taking a look at what's working really, really well. So you'll see this change. This is one of the changes up in this quadrant. It's bullish as expected. So NASI is up, S&P 500 is up, pound CAD is up, Bitcoin is up. Look at pound Kiwi. Holy smokes. So pound Swissy is up, pound CAD is up, pound Aussie is up, pound dollar is up, pound Kiwi is up. Hey, maybe pound is strong, huh? Okay. And this is all short term. This is what's been happening overnight. This is why you want to go here quickly. Okay. Also, this is telling you what's expected. That's the other thing. Instead of looking at all the different cards or going to like the score chart summary, all that data is in here because that's what these scores are. So everything 2, 4, 6, 8, these are bullish scores. Everything to the right or have bullish scores on their scorecards. They have good economic data. Everything to the left has less good or bad economic data. So that's where that score comes from. So, like, for example, Euro Pound has a score of -6. This is expected to fall, according to QuantBox economic analysis, not just economic analysis, the comparative economic analysis of Euro to the UK. So it's holding a -6 score. You can go check it out. It's already scored. We know that's long term, right? That comparative analysis, economic data is long term analysis. And what this is showing you is it's down 0.4% today, actually 0.37% right now, with a score of -6. So it's expected to fall, and it has fallen, but then it also puts it into scale. How far has it fallen? Huh, a bit, but it is down. It's doing what, right? And now the interesting thing about this scatter plot is yesterday it might have been somewhere else. It might have been up instead of down, and that's somebody's short. So it's working out great. So to put that in perspective, we don't know, but some point in the future, one would expect that these will be up. They're not up today. Will they be up tomorrow? I don't know. Open up a chart, do some analysis. You also have to be a technician. But most likely, somewhere in the next 3 months, it could be 3 months, it could be 3 days, it could be 3 hours. But at some point in 3 months, I doubt the economic conditions in these asset classes will radically change. The central banking policies probably won't change. The economy won't suddenly go from good to bad or bad to good. It'll be very minor changes even over the next 90 days, right? So that's why you got to keep an eye on some of these things. Maybe these, these yens are down today. That makes sense now, but that doesn't mean it'll be down forever. So anyways, you can consider them outliers. Cool. So everything in these green quadrants are working right now as expected, and everything in the red quadrants might be tomorrow's trades, might be next week's trades, might be next month's trades. So you keep an eye on them. Okay. So you could just open up your charts and see, are there buying opportunities on any of the ends? And that's how you'd go into it. Cool, right? Yeah, very cool. So more announcements coming. There is a lot more upgrades to be announced. I have another one. I don't know if I'm going to share it today or tomorrow. I might show you some smaller ones. Like I haven't actually told people about this update. So maybe I'll send the smaller ones. And then maybe I'll save the ace in my pocket for later. There's another huge tool that does nothing that QuantBox does now, and it does it now. Once again, not looking at the same data, looking at new data from new data sources to come and give you different perspective from a whole different mathematical model that actually helps predict the future. Ooh, I said too much. So I might save that for a couple of days and let you guys savor that. And then I'll launch it and wee. It's good stuff. So, anyways, looking at that scatter plot, let's just for fun, I'll show you. Um, oh, actually, where was it? That I just no, I lost it. That's too bad. That chart there was something I gave Aiden, which is the AI project I have going. I was that actual chart that I just got rid of. I don't even remember what it was for Aiden. So, anyways, it's kind of interesting. All right. So let's take a look like this one here. Okay, so I'm short pound yen. Cool. Nice. Does anyone remember why? And it looks like I hit my target, by the way. Isn't that neat? The weekly target, M2, all the way down to S2. That's it. That's the full maximum weekly swing trade. Awesome. Okay. And Denise is like, I'm short because of Canada today. Right. Well, that's the time. The rationale is seasonality, right? Seasonality says be prepared for some yen strength. And there was no yen strength at all. It never existed. Like if we go in these charts, like look, it's all yen weakness. And in fact, I know it's hard to see with all these pivots, but like look at the acceleration. The entire year it was straight up with very little hesitation ever. So I shorted it. Is it a counter trend trade? No, 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 no. We know if it was, and this QuantBox tells us this, if there was going to be a time for a pullback, it would occur January 1st, or sorry, July 1st. And so I took that setup, jammed a stop. So at one point, so you can see my entry, right? My entry's here, and now my stop's here, but my stop was up here. So I would have lost a little bit of money if it didn't work out, but I still sold it with rationale. Yes, there's some seasonality, but seasonality is, a 20-year average, which is helpful, but it's not certain by any standards. But can I sell on the, near this pivot? Can I sell? Remember, the first is sort of, oh, it's back in here. So I might have actually sold like literally this or this. Okay. Well, it's still a double, triple top. It's a bit early in the moving averages. And it topped and it topped and it topped and see, it topped again. Fine, fine, fine. And then it made a lower low. So somewhere along the way, it must have been around here. I jammed my stop at break even. Now I'm done. So it wasn't because of Canada Day per se. It's more like I was eyes wide open on Canada Day, looking for it, evidence of a technical reversal that would confirm possible seasonality declines in this asset class. And it happened. So I took it, I managed the risk, and now I jam my stop. So I have no risk. And it ended up, you know, it's not what I traded it for, but the swing trade, right? Sell at M3, target the green zone. I could get out for a couple of hundred pips, right? Where am I short? 138.70, 138.70, and we're at sorry, 183.70, and now I'm at 181 something. Yeah, so it's a couple hundred pips. Uh, or I have a bigger point of view and I back out. And the interesting thing is, I look at this chart setup and there are bulls here and here, and we haven't even gotten down to those basic levels. So my risk here isn't losing money. I can't lose money. That's opportunity cost now. I can't lose money. My risk is that bulls buy it back down at around 180. I still have 100 pips I can make on this. So I'm going to stay short. It might take me a long time. This is a get out. We're at a take profit zone on the shorter run. Okay. Once again, that's opportunity cost. The next one is down at 178, actually 177.93. Bulls will probably be ambushing me there. Okay. But maybe seasonality continues. And my ultimate target on this trade, really the realistic target is 172 and a half. I can't quite see the actual number. 172.32. I can hope for 168 and a half or 168.70. That's not likely. So it's possible, but not likely. Okay. But anything's right. So the pattern that I'm looking for, or the strategy, looks like that. I can stay short that long. Okay. By the way, guys, I'm just doing technical analysis now. Okay. So it's falling. Okay. And my risk is going to be sort of in here. So on smaller time frames, if it drops to this level, so let me do this in blue in a smaller thing. If it drops to this level and then I get reversal patterns, I should probably take profit. Okay. Sure what I'm talking about? Cool. Denise says there was a nice little roll reversal yesterday, so we can look into that. Okay. So basic price action trading. Okay. Let me thicken this up a little bit. Okay. Once you're down here, uh, the risk is counter trend there. The risk to a bear, when under this circumstance, it can go all the way back here. because we've hit the target was actually hit Monday, not Tuesday. I'm back down to the aggressive level today, but the risk is still there of a counter trend appearing. Okay. But what she's saying is when you're down here, if you're trading with price action, you look left, you look at the old support, drag that across, and that gives you an estimation, guesstimation of where to sell in the future. Yes. And I do that all day long. So when you're down here, you say, somewhere around here, I want to get short. And so what happened? I went up there, got short. Yeah. And that's price action. So for those that are members of investorbootcamp.com, take the price action course. Okay. Yeah. Very, very important. Now, if you don't use price action that way, that's what the moving averages are doing too. So you sell off the 21. Yes. Sweet. Now, if you don't use moving averages, you like daily pivot points, sell at 182.0127, uh, which is there. Bearish selling zone. Cool. And that target is actually down here today, which is cray cray. That's a huge day trade. So, yeah. So maybe this later today. Okay. You have to drop in maybe a smaller time frame to even see it. So we have a market opening happening in a couple of hours. So here's the Asian session. Here's the London session. And somewhere soon, maybe the New Yorkers open up and they take it down to that new target. Okay. That's if it continues. The green zone down here says caution. So again, I'm teaching artificial intelligence how to read a chart. And because I'm building a free app for you guys so it can give you feedback instead of asking me, Wayne, like, hey, Wayne, what do you think of this trade? Um, my time is expensive and I don't have much of it, and it would take a while for me to get back to you. I'd like to develop something that you say, hey, what do you think about this trade? Ching, your Gmail account goes, feedback is available on your trade. And you're like, dude, it's been 4 seconds. Uh huh. Okay. And so what it's going to do using different things, but it would look at your trade. If you said, I want to sell here, it's going to confirm, yes, okay, you're a bear and the market seems to be bearish. That's cool, but you should be cautious. Now, I'm not sure to what degree it can tell you why, but it would still, as far as we got it now, it's smart enough to say, okay, but technically, we agree with you on your strategy of being a bear, but technically, you should be cautious right now. And that's about right, isn't it? Yeah, 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 yeah. This could fall. In fact, it'll probably fall. But you're at a price zone where your risk is increased. The risk of reversal is increased. So, dude, be cautious. Okay. Would it be risky to sell the close and take the profit? Right. Well, look. Part of the analysis is like, I don't think you would sell that if you didn't think you could get to target. That's the target. So what I actually teach, if you want to know, Jim, like if you saw this 1,000 times, what would the average give you? The average, price action end up being this. If you saw it 1,000 times, more often than not, it's going to reverse. In fact, at Investor Boot Camp, and I believe it's in the swing trading course, I give one counter trend strategy. One. I know a lot of things about trading from sitting here every day for 20 years. I only know one counter trend strategy that I like, and that's actually it. So you can counter trend it. And even if it doesn't counter trend, the risk is real, my friend. Okay. You say, especially because it hit on Monday. Well, in particular, not especially, in particular, because, right? So, especially mean like on top of, right? No, 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 because of. Okay. So, anyways, there you go. So, yeah, you could short it, but dude, be cautious. Okay. I'm getting frustrated with that project, though, to be honest with you. I have another meeting with them today. Burning cash. I was a lot more excited last week. This week, you ever like buy a car? You're so happy your first week, and then the second week you're looking at it sitting on your driveway, and you're like, "Oh my, what? Really?" Yeah. So, anyways, there's your yens. There's your yens. Here's another one looking at it differently. Okay. Beautiful trades. Beautiful trades. Beautiful trades. Right on time, behaving exactly the way you would want. Bringing it on down. So now we have that new lower low and 153. I forgot the rationale for it. Is it technical? I forget why we pointed out 153. We did some analysis on another meeting, but we pointed out where maybe it's just a fib in this area here, which we could be a week away, but somewhere around there, you could get ready to be a bull again. Okay. Now, I've talked about it before. I know you already know. I need to tell it again so that you can remember it. When I pointed that vertical line on the chart, okay, and we're off a day actually. When I put this on here, I said there's nothing on the chart that says down. So if you're only a technician, you're not going to see that coming. I said if it reverses, it's going to blindside you. If you're only technical, you're going to buy this dip. And then you'll just get blindsided. You're like, dude, this worked 27 dips in a row and this dip didn't work. What the heck happened there? Well, it was a dip shift. No, it's seasonality, man. Seasonality. Wait, you're not looking at 20 years of price action data? Well, we are. So anyway, somebody got crushed on this, never saw it coming. They got run over, broadsided by a dump truck. Cool. Interesting, huh? And so now we could look at here. This is where you kind of somewhere between, it's a big number. I have to figure out why we said 153, but for sure, just looking at this chart very quickly, if I can grab this, it's not going to let me. I'll grab it from this side. I would definitely consider this area for sure. And then I would throw down the psych level. So I would say somewhere around 150 to 150, 150, we get back into the game to the upside. You see the difference though here? Now we're thinking weeks in advance versus retail traders that tend to think now. There's a big difference because if you're always trading now, you're trading on somebody else's terms. The enemy is choosing the battlefield and when, and they're already prepared. You're not going to excel in a situation where the enemy has time to prepare and take advantage of the situation, right? So anyways, planning in advance, If you should be thinking about this now, where you say, uh, if euro yen continues to fall and we get near the zone near 150, 150, all the way down to the cycle level, and once we get in that zone, you see a reversal pattern. Then, if you still believe in yield curve control policy at the Bank of Japan or future seasonality, and by the way, I already know what this is going to, the seasonality is on this. When I'm thinking September, October, I already know what that seasonality is. Like I already knew this is a vertical line here. There's another vertical line out in the future. So if we run into that seasonality and then you see the double bottom at my price line, then a higher high, higher low, then I'm going to look for that. And we're going to not predict, but be prepared for the potential, just like this reversal we talked about. What, a weekend event? I talked about that happening in January. On that day, this might happen. It's unbelievable. Most people won't believe me, but you were there, right? So if it's predictable, it's teachable. If it's teachable, it's learnable. And now you have the data. Now it's not some secret synapses inside of Wayne's brain. No, it's just analysis of hardcore data. Now you just literally have the tool. So thank you for using QuantBox, huh? So that's that. And so right now that is down. And part of this analysis, of course, is medium term risk off. One reason for it is yen seems to be strong, 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 yen seems to be strong. That's a funding currency. That means risk off. Therefore, that medium term gauge, that weekly gauge of risk on, risk off, now leans to risk off. Plus, it looked at VIX. Plus, it looked at gold. Plus, it looked at dollar. Plus, it looked. So it's awesome, huh? Gold is up, and I don't like that. So I will make some adjustments. There you go. I'll say it that way. This is like one last chance for gold. Okay, when this is happening, when this is going up, so let's say this is now my Alamo here, probably closer to 1950. Um, Gold going up is risk on. It shows aggregate demand, and that's risk on. And so that gets put into the gauge. And so if gold was falling, the risk off, the medium term risk off gauge would be more risk off. It's now only slightly risk off. And notice, like, if we bring that back, let's end it this way. If we go back to the gauges, risk gauges, I mean, look at long term, it's mixed, short term, it's mixed. Be careful. Okay. It Marco says, is the risk on, risk off gauges available on retail packages? No, no. I mean, and Marco, you have to appreciate this. The difference between pro and retail, they look the same, basically. Like, for whatever's on retail is also on pro, right? And you're like, dude, it's just a copy of it, right? No, no, it's not. Okay. It doesn't work that way. This is not like a website where you're like, oh, copy, paste. I wish. Okay. So you're actually just looking at a live database. Okay. So here's the problem: to build this on retail, it would take another 100 man hours to build this gauge for you. another 100 man hours. We'd have to redo everything from scratch, no cut and paste, duplicate everything. And it's just too expensive. So but I'm taking all your subscription fees and I'm throwing it back into future development, right? So I'm putting a lot up front to do all this. So what I'm asking is, I'll put it on pro. You're not even paying the same, you're paying less than everybody than retail. But if you can do the pro, you're in it for a year and I can reinvest all of that into that, right? So you're committing to a year and I'm committing forever. So I wish I could. Um, but yeah, it's a whole nother project. It's just all redoing it. It's a lot, bro. It's a lot. Yeah. So I'm not doing it as like a cool like marketing trick. Um, no, this is interesting stuff. Let's just say. So that's how I got here. Anyways, so it literally does not exist on on the retail one on QB, right, on QP retail. So yeah. Cool. So anyway, so I'll leave you at that. We're running into a mixed market. I wish all of these things were lined up. Notice that they are sensitive. There's a slight lean to risk on the monthly. There's right definitely a little bit of risk off. You see how it's just a little bit risk off, not a lot risk off. Okay. And but today, right now, is mixed. But look, if you were watching this, okay. Well, first of all, remember that it's risk off for weekly. Okay. If you're on the new dashboard and you were trading today and all of a sudden it went tick, 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 and suddenly today the daily bias is risk off. Now you have weekly and daily aligned. It's probably a risk off day. I hope you love it. Like I'm tingling with excitement. There's a lot of hard work here. I love it. Honestly, I love it. No. It updates in real time, Denise. You don't have to do anything. Again, the database table in the background updates and it just goes doop, right? Do you have to refresh a page? Nope. Yeah. 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 If it was HTML, right? I would have like, for example, images. You'd have an image for extreme risk off, moderate risk off, slight risk off, mixed, -1, mixed 0, mixed +1. And you'd have all these different images, right? And then you would tell the server in a certain circumstance, change the image and show you a gauge. Um, this is actually, if I went into the back office version that I have as developer access, when I click on this, it actually brings up a table. And the table is populated by pulling in data from the VIX, pulling in data from yen futures, pulling in data from the dollar index, it's pulling all and it's updating. Boop, boop. So the table will update every so often, whatever it is, every 15 minutes or 10 minutes, whatever, because we're pulling from different data sources. So it depends on when those get updated, but we're pulling, put updating the table in the background, which you don't see. And as we're getting new information, the gauge is changing. And so that's not actually an image. That's just a recreate. It converts a table into a gauge, but you're just looking at it in real time. So it's not even an image. There's no image. I don't have any JPEGs or GIF files being flipped around on a web server. There's no web server here except for the QuantBox website. But this is actually embedded and it's directly into the Google Cloud database. Yeah, no, it's it's ripper awesome. Yeah, cool. So I gotta go. Got to jump, babe. That was real. Peace on earth. May the pips be with you. May our profits be above average. Have an amazing trading day.